Yo guys, I'm back with another video. This is how I mark up gold to get ready for my trading day in 10 minutes. Simple, quick, and easy. Let's get to it. So first, I look at the daily time frame. I see how the daily time frame is going, moving. I usually want to mark out areas of liquidity. So I want to mark out maybe one area here. I also want to mark out one fair value up of the 4 hour right here. Before market open, we had this for value up that we had here, and then Tuesday we tapped back into it, signifying good rejection off of it. So I definitely want to see a push lower. I did take no trades today as well, but that's another video. But let's go to the 4 hour time frame. 4 hour time frame, I want to mark the 8:30 a.m. high. Let's go to today. So right here, London highs. We already have that marked out. We have an indicator. This is the indicator right here. But I want to mark these out. I want to mark some fair value gaps. So I usually mark one. Excuse. I'd usually mark up one for value gap. So this would be this one right here. This would be a Tuesday for value gap, and right here on Wednesday, this last at 2 a.m. we kind of ended up tapping into it, showing nice rejection, bullish rejection. So I definitely want to see a push lower. So that's one thing we could see. So as we can see, we have one nice rejection off here since Tuesday, which is another signifying for push lower. Another rejection off here since Wednesday, 2 a.m. So that was our overall bias for today. We want to push lower, push lower. That's our bias. Let's go to the lower time frame to see what we could take a trade on and potentially an entry. So over here, honestly, not much on the hourly time frame, right? So we just had this rejection. We had these double for value gaps that we did come into. So right here, we had nice rejection off of them at 10 a.m. 10 a.m. we came up, we had nice rejection. After this close at 9 a.m., we had our 10 a.m. candle that opened. And essentially this one had nice rejection off of it as well, respecting those key levels, right? And we just kept pushing lower. On the 15-minute time frame, I did want to see some sort of high time frame candle bullish structure. So right here we had our nice candle bullish. We did see a nice inverse fair value of the 15-minute of the higher time frames, right? This was a good entry if you want to take some shorts since 10:45. Could have taken shorts right here, right? That was our 15-minute bias, as well as we would mark out these highs right here, and we would mark out London highs as well. Okay, so let's look at the 5-minute for probably some more fair value gaps, areas of liquidity. So right here, we have this nice order block or supply zone. I think that's supply zone, not order block. And then we had this nice key area of resistance that we did break past. So we definitely want to see some sort of push lower, right? We have this inverse fair value gap that we did mitigate. On the 1 minute, we did have this 5-minute inverse, right? And this is all before market open, by the way, guys. Like all this that marking out is before. I want to make sure you guys okay. You guys can hear me. Good. So yeah, a nice inverse red where you did retrace back into it. You could have took yourselves, put yourself on the sides and end up selling. Then on the 1 minute, or let's go back to 30-minute actually. Just want to mark out key high levels and key areas of interest, right? Anytime we want to come back to a zone, it's not a line, it's a zone. So you want to take the square and you want to use that zone to your advantage, right? Okay, nice here. Now probably an entry would be around this breaker structure right here. We trace them back into this kind of zone, and that's how you essentially mark up gold, like how you get ready for take a trade on, especially on the higher time frames where you know you want to see more mitigation within your confluences, right? You want to see more rejection off your confluences to further help you understand what type of direction you're going in the market, right? So you want to take a look at the London lows, London highs, New York highs, previous London low, London highs. You know, how are we rejecting? Are we respecting these confluences? Are we rejecting off of them? You know, that's what you want to look out for and keep an eye out. But that's pretty much it for this video. A little quick summary of how to mark up gold. you want to use a lot of fair value ups in the higher time frames. You want to see the overall bullish momentum. We're getting that nice momentum right here. I think potentially tomorrow we could see nice buy positions because we're getting this nice accumulation, right, on the 2 hour time frame, and then we manipulate it down, taking all that stuff out of liquidity. So I definitely want to see some sort of distribution to these highs, right? But that's pretty much it for the video, guys. I hope you guys enjoyed. Comment, like, and sub, and see y'all on the next one.